Inflation Overview, July 2025. Headline CPI. Year over year inflation held firm at 2.7%, unchanged from June and slightly below economists' expectations of 2.8%. Fuel prices, a major downward driver, gasoline prices were down 9.5% compared to a year ago, helping to suppress the overall CPI. Core inflation. Stripping out food and energy, core CPI rose to 3.1%, up from June's 2.9%, surpassing the forecast of 3.0%, signaling broader price pressures. This uptick highlights the gradual pass-through of tariff costs into consumer prices, particularly noticeable in goods like appliances, shoes, furniture, cosmetics, toys, and services like shelter, healthcare, and transportation. What didn't happen, and why it's surprising? Economists anticipated inflation rising due to tariffs introduced by President Trump, yet headline CPI remained steady at 2.7%, confounding expectations that tariff shock would ramp up inflation. The drop in fuel prices has delayed or dampened the immediate impact of tariffs, offering a reprieve on headline numbers. Market and Fed reactions. Federal Reserve rate outlook. Markets quickly reacted, pricing in a substantial chance of a September rate cut, rising to about 90 to 95% probability depending on the report. Following the report, Treasury yields fell and the US dollar weakened, reflecting investors' increasing confidence in imminent monetary easing. Fed's dilemma ahead. The Fed now faces a policy quandary, whether to cut rates to support a slowing economy or hold steady in the face of underlying inflation pressures from tariffs and core pricing gains. Data suggests that while headline inflation is muted, persistent core inflation and service sector price increases like shelter could complicate decisions going forward. Summary snapshot. Metric. July 2025 outcome. Headline CPI, 2.7% year over year. Trend impact, stable, slightly below expectations. Metric, fuel prices, minus 9.5% year over year. Trend impact, major drag on headline inflation. Metric, core CPI, 3.1% year over year. Trend impact, accelerating, rising pass-through and service costs. Metric, Fed rate outlook, 90 to 95% chance of cut. Trend impact, market increasingly expects easing in September. Metric, policy outlook. Trend impact, tension between cooling economy and stickier inflation.